Actually, most Asian markets are not too bad. Some of them are definitely seeing cuts.
Elara expects a 3 to 4 upside in NTPC's FY24 to FY26 EPS estimates.
It's a good opening for the market, by the way, after yesterday's move that we saw on the upside.
So I think if at all you want to say the worst of the banking sector, though that phrase technically does not apply, would potentially be this quarter.
As far as defense is concerned, we are very optimistic about the overall manufacturing scenario of defense production.
But over and above, if you see, the growth of the cities are definitely happening, and India is growing, but real estate will grow faster.
Company says they are on track to deliver their pre-sales guidance of 14,500 crore rupees. This is for FY24.
In the markets, there has been a sudden fall in the last 30 minutes or so.
Lastly, it has also mentioned that it has the potential to re-rate just the way Bharat Electronics or BEL did over the last decade, provided it gets its execution right.
In the last 3 years, let's say this market has grown around 25 to 27% of a CAGR like that.
Remember, we'd earlier reported that the November 22nd deadline to submit EOIs had lapsed.
We've come off from the highs of the day, but that is something which we have been seeing for last couple of trading sessions.
Good afternoon. You're with us on the last hour of the week. This is Closing Bell, and I'm Surabhi Upadhyay. With me, as always, Nigel D'Souza. We also have Ekta back with us. And it's turning out to be a bit of a somber close to the week. We had that great pullback rally yesterday, but we haven't gotten any follow-through. And today, the problem is that it's the bank nifty, which is always this problem child who takes one step forward and then two steps backwards. That is not much of a surprise. But the other negative is that the mid-cap index has really struggled today, and mid-caps have cooled off. There's been some profit-taking coming in, about 0.5% down on that index. Must point out that there is a lot of buying in frontline IT, and that's helping the Nifty find some sort of balance. And the bulls will hope that continues in the last 1 hour, because otherwise banks are putting a lot of pressure. IT and Reliance are doing a lot of the firefighting, and that's why it's kind of evened out on the headline index. But guys, let's see what the next 60 minutes bring. Right now looking a little tentative.
I think the mother market itself is looking a little tentative, right? When you have the Nasdaq on a 5-session losing streak, you're getting a little bit worried what's going to come out with regard to the jobs report later today.
Yeah.
And after a while, after actually many weeks, for the last 2 months, we've been hearing about the Fed being sure, everyone's sure that the Fed is going to go ahead and cut rates. Now, after many weeks, the question marks are coming back on. What is the quantum and what is the duration of these rate cuts? So I think that's why it's making the global markets a little bit jittery. And I think some people will be saying, let's take some money off the table. We've already had a good last couple of months. Take some money off the table, go out, have a good dinner, have a good weekend, knock in a few.
See, that was the end of the year phenomena. Fed said we were doing 3 cuts. Market said maybe 5 will happen, maybe 6 will happen. Partied into the new year.
Now you're sobered down. You're coming back to reality.
Now it's reality check. It's January, so a lot of questions are being asked.
Yes, absolutely. And there's nothing wrong. And you said the problem child. Maybe there will be a comeback once HDFC Bank also reports its numbers. 16th of Jan is when it's coming out. But we have a lot of cues lined up in the next couple of days, and that's going to be critical. We have, the US non-farm payrolls data for December, which is going to be out this evening in the US markets. We'll be reacting to that on Monday. We have the Spark call, which is taking place tomorrow, and I think the street is really anticipating something from that, considering the run-up that we've seen on the Spark counter. We have Delta Corp coming out with its Q3 numbers rather on the 9th of Jan, and then obviously the big boys, Infosys, TCS on the 11th, which is on Thursday, and follow it up with HCL Tech as well as Wipro on the 12th of Jan. So that's really going to be a big lineup of events, and like you mentioned, the party's over, earnings is back on the cards, macros is back on the cards, and that's going to be the key cue.
It's very interesting to see the kind of buying that's starting to take place in IT, because what we've seen in the last 48 hours is several brokerages come out calling a bit of a bottom on IT earnings. Maybe not in Q3, but going forward into 2024. We've seen that from JP Morgan, from Bernstein, a couple of others as well, reducing their negative stance on IT, and maybe that's kind of working well for the sector as a whole today. Anyway, lots to talk about, so let's straight away dive into it. How do you position yourself in the last hour of trade? We have Mitesh joining in. Mitesh, let's talk the indices first. Nifty is flat because of this counterbalance that some of the other stocks are giving. But what would you do? Any index trades, Bank Nifty for the last hour?
Surabhi, good afternoon. In fact, I know I've been kind of suggesting that don't get into directional mode or trade into the indices right now, given the fact that my outlook is more of sideways. consolidation kind of an activity in the near term. So Nifty 21,500, 21,800 remains the range, broadly give and take 20 points, and try to buy closer to 21,500, take profits beyond 21,750. That could be the order of the day for the next 4 to 5 sessions. Similarly, the Bank Nifty 47,500 is the first support level, and 48,200 is the first supply pivot. So I think it might just chop around between that. Avoid the losses for the time being. And on the stock side, I have a sell on Shree Cement with a stop at 27,500 for targets of 26,000. While SBI Life is a buy with a stop at 1433 for targets of 1490.
Nitish, hi, afternoon. Wanted your thoughts on a smaller cap counter such as Spark, which has seen so much momentum on the upside. It's up over 40% this week. What would you recommend to your clients on this one?
I think the stock is now showing signs of a major breakout on long-term charts, the monthly and the quarterly charts. And the highest monthly closing which the stock gave was 507, which was way back in 2017. I'm penciling that as the target. I think that's the minimum the stock should do. Good chance that you might even see the rally extend to about 593, which was the intra-month high on 2015 chart. So I think that's the longer-term target which the stock is heading towards. This is accumulate. Given the fact that it's up about 45% in this month itself, which is only about few trading sessions, you might want to enter in a slightly, slow manner, buy partly now. If you get a decline or a pullback to about levels of 375, 385, add more, and then just sit tight to the stop below 350. I think this is heading towards 500 as a minimum, and 590 is the next target.
Okay, all right, got that. Thanks a lot for that, Mitesh. We'll keep coming back to you as as the hour progresses. By the way, a few stocks that are catching your eye. Yes, the market's a little bit wobbly, but pull up Endurance. Endurance has moved to the high point of the day, so that's one of the stocks that should come on your radar, moving to the high point of the day as we speak. But in terms of winners, we have HAL, that's Hindustan Aeronautics. Well, that's buzzing in trade after brokerage house UBS has initiated coverage on the stock, and they appear fairly positive. Hormuz joins us to detail that particular report. Hey, Hormuz.
Hi, Nigel. So, UBS has called Hindustan Aeronautics credible defense compounder as it has initiated coverage on the stock with a buy recommendation. The price target of 3,600 rupees implies a potential upside of 24% over the next 12 months. And it was also mentioned that Hindustan Aeronautics has the potential to triple its order book from the current 80,000 crores in FY23 to almost 2.5 lakh crores by FY26. Now, UBS is saying that the ordering activity at HAL will accelerate due to the fact that there will be a depletion of India's military aircraft strength over a period of time due to the current geopolitical tensions, and as a result there will be a greater need for aircraft availability, which is why they would see some acceleration in ordering activity at HAL. They are also mentioning the fact that the consensus view is not building in HAL's ability for a faster order completion, the ability to ramp up production, the improved manufacturing value add that it offers, and a responsive ecosystem which is prevalent in the country today. And what they are also mentioning is that HAL has the potential to re-rate the way Bharat Electronics did over the last decade, and but provided the execution of the company is right. Now, as a result of which HAL stock is trading at a record high today. It also crossed the 2 lakh crore rupee market cap. Now, UBS is calling it a compounder, but I'm sure it's a compounder already, because since its listing in 2018, the stock is almost up 5x from its issue price, adjusted for the 1:5 split that it did. So it's been good. It's a bullish commentary on HAL, projecting upsides of 24% and higher going forward.
Okay, all right, got that. Hormuz, thank you very much. HAL, as Hormuz is telling us, continuing to make newer highs. Well, since we're talking about the defense space, let's talk about one more industrial stock. BEML has, of course, been one of the big winners of 2023. The stock gained more than 96% in the last 1 year. The company has orders worth 329 crore rupees from the Defense Ministry. That's a recent order win. Of course, they have a much bigger order book. They're talking orders of 14,000 crores for this entire FY24. Earlier in the day, we caught up with Shantanu Roy, the chairman and managing director of BEML, to discuss the outlook going forward, as well as the pickup in execution. And he's promising top-line growth of 20 to 25% over the coming year.
The overall defense order book that I can see, the defense opportunities in which BEML is present for in the next 5 to 7 years should be around 30 to 40,000 crores for BML alone. FY24, I'll still maintain 14,000 crore. You see, right now my order book is around 12,500. We are expecting around 3,500 crores in the next 3 months. So we will execute some of those. So we will end the year at around 14,000 crore. FY24, you see, we have targeted a 20% growth. And it seems possible. It seems possible as I talk to you. FY25, we will again target 20 to 25% growth, our top line. As far as the margins are concerned, if you look at our half-yearly results, we have already reached an EBITDA margin of around 7%. So I want to end the year with at least 200 basis point growth over last year's EBITDA, which was around 9.3%.
Okay, all right. So those are both the two top movers today, HAL and BEML. Dilip Bhatt joins us to give us his view on these names. Hi, Dilip. First of all, very happy New Year to you, your family, as well as your entire team. Wishing you a cracker in terms of 2024. Let's focus on these two names since we just discussed that. BEML as well as HAL. They are bucking the trend today. What's your view on both of them?
Nigel, first of all, let me wish you, your entire team, I think Surbi, Ekta, everyone, and your entire CNBC team, your audience. I think you people are doing a wonderful job, and I think everybody is really liking that. So coming back to your question, I think, yes, the theme of PSU, which has played out so well in the last 15 months, I think that continues unabated. And more so when you talk about these two names, because it has got an added sheen of defense in this particular companies, as what we heard the CEO of BML also talk about that. Now, if you ask me what we should do from the current levels, my suggestion, I strongly feel that one should wait and watch, because the orders, the strong orders that they have got, the good orders that they have got, and the visibility only means that the execution is the only key risk out over here. And if you go by the past track record, the execution has not been all that great to inspire such a huge unabated confidence. But one thing we should not forget, that with the certainty of this current government continuing post-elections, I think these PSU teams and the defense teams will continue to be on the radar for a lot of people. And not to forget that these are very liquid names. So a lot of FIs which are shied out of these PSUs may start getting into this, because there is going to be a lot of OFS as the market cap goes up. So I think there is still good room for some of these PSUs to go up even from the current level. But personally, I think on a fundamental basis, one should exercise some kind of caution.
Okay, all right. Well, there is some amount of profit booking which has taken place in the PSU banks as well this afternoon. So Bank of Baroda, Canara Bank, IDBI, a couple of these stocks, all of them under pressure as we speak. Dilip, hi, afternoon, and thank you for the warm wishes as well for the new year. What is your thought on the PSU banks, considering that we've come off a very good run-up? They all are, quite bullish in terms of credit growth this year. Would you see any headwinds there?
Well, I think one thing is certain, that the banking and the finance sector looks the pick of the sector even going forward. And if you just see today's headlines, the kind of credit growth that some of the banks have shown, it inspires a lot of confidence both in the finance sector, banking sector, as well as in the economy. So I would say that the PSU banks, though they have had a very good run after a very long time, I still see that certain select banks can still do pretty well. I think SBI, still being the #1 bank, has still not gone anywhere in the PSU segment. It still holds a good potential to move ahead. I would say something like a PNB also looks pretty good and interesting. Even central bank is something which we are just trying to study and find out. So not to forget that the PSUs have had a very difficult past. Now, whether that is going to change, the way they operate is going to change, is a big call or a big leap of faith that we have to take. Having said that, I would still say that some of these PSU banks still looks pretty good and interesting.
Okay, so you're still liking some of the PSUs despite the run-up. Got that. Dilip, stay on. We're focusing on some more individual stocks which are catching the eye this afternoon. And after HAL, the next one we have on our radar is Gujarat Fluorochemicals. Now, the stock is down about 4-5%, consistent pressure coming in. And of course, it's been a very big high flyer as well. As the one-year chart will tell you, there's been intense buying on the stock in the last 2 months, along with a huge rally in the rest of the market. So that's the caveat. That's Gujarat Fluoro today. Let's pull up a one-year chart just to get the context right. There seems to be an MK note out, which is pointing towards, well, maybe some limited business opportunities and a lot of the newer businesses that perhaps the street was getting excited about with respect to this company. Sonal is joining in. Sonal, fill us in. What exactly is the issue here?
Well, the street has been very positive on the battery chemicals business, not only for Gujarat Fluorochemicals, but the other chemical names as well. But MK says, looks like the recent run-up in stock is due to this market enthusiasm about company's battery chemicals business. But the optionality value of this business for FY28 is already discounted in the price. So 3 years or 4 years before the business could actually come into force is the market pricing in the growth from there. They say even if company is able to sell the possible expanded capacity of 15,000 tons of the product by FY28, the best case value in terms of incremental addition to their target price would just be 316 rupees a share. But the rally has been much more than that. Full ramp up in the battery chemicals business has already been factored in the current market price. So basically, it has run ahead of its valuations. They expect FY24 to remain muted on volume and pricing pressure. They have tweaked earnings by around 14% for FY24, 5% for FY25, but they've increased it by 5% for FY26. They maintain their sell, but they've increased the implied multiple to 30 times versus 25 times earlier because they've rolled over as well. The target price is at 2,800 rupees per share. They are building in the higher optionality value of battery chemicals, but they think most of it is already in the price.
Okay, all right, Sonal, thanks very much for that. So 2,800 odd rupees is the target price, and the current stock is at around 3,600 odd rupees. So there's quite a gap between the two. Dilip, would you concur? Have you looked at a stock such as Gujarat Fluoro and, the fact that battery chemicals, the business opportunity might be a bit too factored in?
Ekta, surely, I think some of these companies, I think, are planning to move into the lithium battery space, and which is what has really driven the prices up. One thing very conspicuous about some of the, not some, but there are a lot of companies, is that the expectations is strongly overriding the fundamentals at the moment. So in this case also, when you talk about lithium battery, the capital intensity of the business is going to be pretty high. And this technology is also been changing very fast. So it's very difficult to take a call after 2 years or 3 years because we are in a situation where there's a lot of the things are in a state of flux. So I would say that one should be extremely careful, and I would not really be too gung-ho on some of these stocks, especially when they're talking about lithium batteries, where the investment is going to be pretty heavy and outcome still remains a little bit tentative, but market continues to be very optimistic.
All right. Dilip, but give us a couple of names then, because the street is devoid of ideas. Everyone wants a few good ideas. You could give us your due disclosures as well. But from the broader markets, from the large cap names, 2024, if you could share a couple of names that our audience would benefit from.
Sure. I think, Nigel, if you see the frontline companies on a relative basis have really not fared all that great as compared to the overall enthusiasm and the kind of way, the kind of bullishness that we are seeing in the market. So I think in the front lines, Larsen & Toubro still continues to be the pick of the lot because that is a company which has got a good order booking. The execution cycle is good. And most important is that company has started generating good amount of free cash. After working capital. So that's a very positive thing. So I think Larsen & Toubro looks pretty good. I think pharma is a sector that still can go places for next 2 years. I think Sun Pharma and Divi's Laboratory looks pretty good and interesting for us from the current levels. I think the IT names like Infosys and TCS look a little more defensive, providing resilience to your portfolio. From that perspective, not that there will be any great improvement in the performance. Maybe it will happen. We'll see a couple of quarters down the line, but some of these names also look pretty good and pretty interesting.
Okay, all right, Dilip, stay on. We do have to take a very quick break. On the other side, we will also have with us Devina Mehra of First Global, and she'll weigh in on how 2024 is shaping up, what lies ahead, and how investors should be looking at their portfolios.
Welcome back. Well, the bank nifty is recovered from the day's low as well. So there's some amount of buying which is taking place at lower levels. Similar case for the mid caps, which have recovered over 280 odd points from the day's low. The low point of the mid cap index was around 47064. And currently it stands at around 47344. So there has been some amount of intraday buying at lower levels which is coming in. But let's talk about one particular stock which is in focus. That's Shree Cement. Sources tell CNBC-TV18 that the IT department has claimed 4,000 crores of demand for wrongful claims and deductions from the company. Tim C is here with more.
Well, that's right. The Income Tax Department claims 4,000 crore rupees of demand, including tax due, interest and penalty, from Shree Cement for wrongful claims and deductions. Sources have told CNBC-TV18 that IT Department survey claims Shree Cement raised wrongful claims of 8,500 crore rupees between April 2014 till March 2023. Remember, IT Department conducted a survey on Shree Cement in June 2023, and the claims are for wrongful deductions under Section 80IA. The report highlights that 7,000 crore rupees wrongful deduction was claimed by Shree Cement for solid waste management, and IT Department claims that the company does not have any such utility at any of the facilities. Again, 250 crore rupees worth wrongful deduction was claimed for water treatment plant, and IT Department claims that no such utility was found. Rather, the company only has an RO plant which it is being used for its employees. Apart from that, wrongful claims and deductions have been claimed under New India Power Undertaking Scheme. IT Department claims that the company has repurposed old machinery to start a power plant for which it had claimed deductions earlier. Meanwhile, when CNBC-TV18 reached out to the company said the allegations leveled on Shree Cement are both fundamentally speculative and devoid of merit. As such, therefore, we refute the statements. End of quote. Let's see where does this entire battle between IT Department and Shree Cement land, whether it leads to litigation or whether the company comes up with voluntary disclosure. Back to you.
Okay, all right, Timsy, thanks very much for that. So we still have Dilip with us to discuss a couple of stocks. Well, Dilip, wanted to get your thoughts in about the entire real estate space, multi-year highs, all-time highs for a couple of these stocks. Do you see what is taking place on the ground corroborating with what's taking place in terms of the stock prices, and would you be a buyer at current levels?
So what I understand from the real estate space, when we do a study or we talk to a couple of managements, it looks like the fact that the premium residential complexes are getting sold in a very big way, whereas demand for the low-cost housing continues to be a lot more tentative. And there is no doubt that the premium places, real estate really has a good amount of profit in that. And we are seeing a good amount of even commercial spaces coming up. So yes, on the real estate, we continue to be very positive. I think we will still see a good run in some of the real estate companies, particularly the front lines, whether it's DLF or whether it is Prestige or whether it is Shobha. I think we will still continue to see. Even Oberoi's looks pretty good and interesting. This sector will continue to this sector will continue to be in the news as our GDP really keeps on growing, and the top end continues to fare so well. So I think that being the sequence, I would still say that real estate is a sector which one should invest slightly on a longer term basis.
Okay, all right, Dilip, noted that view. Real estate should be invested into on a longer term basis. Well, let's talk about power stocks. They're bursting in trade after the regulator, which is CERC, they release draft electricity generation tariff norms, which will be applicable for 5 years from the 1st of April 2024. Vivek joins us to give us a lowdown on what's going on that front. Vivek?
Well, absolutely right. CERC typically gives it, after the five-year period is done, it is generally done in December. This time around, it got delayed to January. It's a very long document that this time around CERC has come out with. So here's the key gist. Remember, these regulations are the draft regulations. They will be applicable, once it is finalized, once all the stakeholders give their comments. And April 2024 onwards is when they will come into effect. So let's have a look at, each sector in terms of the power sector itself, each segment and how is it that they are impacted. Number one is the thermal power sector. So looking at NTPC, no changes at all in terms of ROE. So it continues to remain at 15.5% for old, existing as well as upcoming projects. Now, when you're talking about incentive income, that is where the real positive kicker has come in as far as NTPC is concerned. So thermal plants, especially during summertime when the peak deficit is quite high, there is an increased added advantage of if the PLF is over 85% to get an additional incentive income. Along with that, there is also an O&M escalation clause that has come in. So it's been revised upwards to 6% from 4% earlier. So analysts now anticipate a 3 to 4% upside in terms of their EPS estimates between FY24 to FY26. Now, next, coming to the transmission sector, Power Grid, a slight negative coming in over here. Existing projects, no change as far as ROE is concerned. But for incoming or incremental transmission projects that start from April 2024, a 50 basis point reduction in ROE. However, remember, this particular reduction is mitigated by the fact that most of the projects that are coming on stream for Power Grid have been won via the transmission or the TBCB basis. Now, next, coming to the hydropower sector, NHPC and LCAV are another stocks to keep on the radar. ROE of 16.5% continues for existing projects, and the ROE for incremental or new projects is now at 17%. So again, a positive over there. And lastly, NLC India, some positive coming in over there. Thermal Power Station 2, this particular PAF or the plant availability factor requirement has been brought down. So incremental EBITDA can come in. So again, positive as far as NLC is concerned.
Okay, got that. Vivek, thank you very much for breaking down all the details. Largely positive for the whole sector, a little more positive for some companies like NHPC. By the way, look at the huge reversal in the market. Suddenly things looking very, very different, and it seems the bulls are getting into a bit of a Friday mode. The Bank Nifty has seen a swift turnaround. In fact, it's almost back at the flat line, and that's helped the Nifty also push higher. Nifty's up 44 points. Pull up the Bank Nifty. That is where the story is, almost trying to push through the green side of the screen. Let's pull up some of the individual names. We're seeing this play out on Axis Bank, HDFC Bank itself, trying to cut some of the losses. IndusInd is lifting up from the lows. ICICI Bank is seeing more green. So this is looking interesting. Building on gains, that's ICICI Bank. The others are trying to cut their losses. There's also additional buying on a TCS, on an L&T. I'd be very curious to know what the FI number is going to look like today as well, because the way money's coming in, across the large cap space, let's see if this is powered by some foreign money as well today. Dilip, let's just get in your thoughts on some of these power stocks. They've had a dream run through 2023, NTPC for instance. What would you do now? Do you think valuations still support an entry? Because in terms of pure fundamentals, the opportunity, the addition on both thermal and renewable, there's a lot happening on ground. But the question is whether stock prices justify fresh purchases.
So, Surabhi, I think power sector is also one of the sectors where the expectations have been running pretty sky high. And what I understand is that for the year 24-25, there will still be a shortage in the power as compared to the demand. So I think the power sector will continue to be in flavor for the investors. And I think though it has run up quite a bit, I mean, there is, whether you call it NTPC, whether you say Tata Power or some of these Adani company, I think all this possibly will still attract good investments and possibly has a little more steam left ahead in some of these companies.
Okay, all right, Dilip, we're going to let you go on that note. It's been a pleasure talking to you. Thanks very much for joining in and speaking with us. So that is the view coming in from Dilip Bhatt. But let's get in another view on the markets now. We have Devina Mehra, who's the founder, chairperson and managing director at First Global, joining in to discuss the markets and the outlook for 2024. Devina, always a pleasure to listen to your views. Wishing you a very happy new year and good to see you here. Not to mention all of your tweets that, I keep reading. And one of them that stood out was your report, which you wrote on HDFC Bank around 30 years ago. Tell us more. Let's start the conversation with the financial space. Your view, one, on HDFC Bank, would you be a buyer at current levels? And two, whether financials are actually going to lead this year.
Good afternoon and a very happy new year to you and to your viewers also. So since you started with financials, I am, some people tell me that in every interview you repeat this line that I'm always a nervous investor in banks and lenders, and simply because in banks you're more likely to get negative surprises than positive surprises. So yes, I mean, HDFC Bank in 1996 was a landmark call for us, and there was a lot of logic behind that. But in general, I am a very investor in banks. And if you look at the banking space itself in the last 4 years, if you look from 2020 to 2023, there's been only 1 year when banks have outperformed. The bank Nifty has outperformed the Nifty only in 2022. And that was the only year where we were market weight to overweight on banks. So if you look at 2020, banking was the only major sector index in the negative. In 2021, the market went up 22%, bank Nifty only 11%. Only in 2022, it had a substantial outperformance. 2023, again, only half as much as the market or probably a little less. So if you look at kind of a non-bank Nifty, the net of the banking stocks, the underperformance would have been even higher. So I mean, only in 2022 you had a kind of sweet spot where NPA cycle was behind you and the credit growth was good, and plus when interest rates go up in the beginning, that is good for banks' margins. But now again, things are not looking so clear on credit quality and all that. To the extent we are quite underweight banks. And to the extent we have banks, it's a little more skewed towards the PSU banks. But of course, I mean, we do hold banks because that is the number one. Banking and lenders together are the number one weight in the Nifty. So you can't ignore them completely, but we are quite underweight. And that our systems don't really like the sector, I can say.
Okay, all right. Hi, Devina, and welcome to the show and wishing you well for 2024. Looking forward to being in touch all through the year. Well, tell us, Devina, so on the banks, I think you'll have cut down exposure a little bit. But what would be the top two sectors you're looking at from year on as well? I understand, I think pharma is something that you're looking at, maybe industrials as well. They still have some juice left in it. Spell out those two top sectors.
Okay, so industrials, most people discovered in 2023. We've been actually overweight industrials since October 2021. So much over 2 years now. And the question we ask every quarter is that, is the story over? Till now, our systems have not signaled that the story is over. Of course, we have cut from the peak, we booked profits and so on, but we still remain quite overweight. In 2023, yes, we added pharma. We also added auto and auto components. Both these sectors did well for 2023, and we still remain overweight there. We added a few construction companies also. So sectorally, those would be the broad overweight calls we have.
Devina, hi, season's greetings and very happy new year to you and your team as well. May it be a good year for all of us. So, we're coming to start this year with this perfect narrative on, falling rates, rising earnings, predicted continuity, when it comes to politics. I'm just wondering then, what should the overall approach be to the portfolio? I mean, last year, CapEx and industrials and PSUs, that was the big theme. FMCG underperformed. Are you expecting that setup to continue, or could we have some dark horses? And overall, what are you penciling in for the market if you try and crystal ball gaze into it?
Yeah, so I've already told you the sectors that we like. So that, but of course, not everything holds for 1 year. So we really look at things from scratch every quarter. So every quarter, the question we ask ourselves is that if we had cash today, where would we be invested? So we don't like to be weighed down by what we did in the past. So that's the question. And we like to be fairly diversified. So I've already told you where we are overweight. In terms of where caution is advised, I would say there's been a lot of euphoria last year on the small cap, micro cap, and small cap indices, depending on which one you look at, are up between 45 and 55%. So that's the area where some caution is advised especially for new investors who don't have an idea of the history of the market, that in 2008-9, the small cap index, not just the stocks, fell nearly 80%, 78% to be exact. And there was about a year and a half bull run in 2017-18, and thereafter again there was a nearly 2/3 fall. So all these narratives of this has been the CAGR in 2 years and 3 years. Let me just tell you that if something falls 65%, it can triple and you will still be at zero. And in small caps, the risk often becomes that it is not even that you will get that price back because many of those stocks just disappear. So, I mean, currently there are about 4,000 stocks that are actively listed, whereas many times more have been listed in the have had IPOs in the history of the market. So many stocks just disappear. So the same kind of risk management that works for large caps with stop losses, etc., doesn't necessarily work for small caps because the stock can just fall and you may not even be able to exit. So caution is advised there. Among the major sectors, as I said, we don't really like banks. On the consumption themes, our systems have not signaled anything great. I mean, there might be an odd stock here and there because sector calls and stock calls are different. Like in 2023, our number one performer in our PMS is a IT company, whereas the IT as a whole may not have done that well. So not everything is a sector call, but sectorally, those are the broadly what our systems are telling us.
Sure. Just to take that point on sectors forward, since you mentioned that you like industrials and overall, I mean, you're also advising caution on some of the smaller names. Can you expand on that? Because again, this is a part of the market that's run up very hard. And we're talking about putting incremental, fresh money to work here. So within industrials, I mean, are you looking at only the biggest blue chip names like the ABB Siemens of the world or mid-cap names, or, would you look at a conglomerate like L&T? What should one look at more specifically within industrials this year, given the rally?
So, I mean, we do have mid-caps also, but overall, I'm not talking, I mean, I would not even have the data immediately as far as, what the split within industrials is. But I can tell you that stocks, we don't look at stocks below 1,000 crore market cap in any case. I'm talking overall, not just industrials. And even within 1,000 to 5,000 crore market cap, we would normally not have more than 15-20% of our weightage there. Currently, it might be around 15. I think maximum we've ever gone to is 22. So those are to manage the risks. And as I said, we don't take very outsized sector exposure also. So our sectoral distribution is also quite wide. So we are not going, even if we like a sector, we're never going to be 40% of our PMS in that sector. So that's what we like to do. I mean, individuals, but beyond that, as I said, individual stocks have to be looked at. Like, for example, this year, as I said, top performer was an IT company. In previous years, among our top 5 have been, for example, ITC and Raymond's, neither of which were sector calls. So the sector is for us more an outcome of the stocks that our systems like, but we like to have that sector overlay only to the extent that we don't want overexposure to a single sector. All part of our risk management. So we always say that you pay 60% of the fees for risk management and only the balance for return management, because investing is a loser's game. So do not lose big money. That's the first mantra.
Okay, all right, Devina, we're going to let you go on that point. And thanks very much for joining in. That caution with regards to the small caps is definitely warranted, considering that the Nifty Small Cap 250 Index has rallied 43% in FY24 year to date. So that is something to take note of. We'll take a short break, but as always, we'll get you some buy today, sell tomorrow calls from our technical experts on the other side. Stay tuned.
Welcome back. Well, the markets are holding with a gain of close to around 50 points. So unlike when we started the show, when the markets are struggling a little bit, we've moved back into the green. The Nifty Bank, though, that's the one that's still down close to around 50 points, and that's a bit of a problem pocket. Though the one that's fighting back is the larger weight out there. That's LNT, currently moved to the high point of the day. That's up close to around 1.6% as we speak. And majority of those moves has come in the last 10 to around 15 minutes. Just take a look at that. Moving up quite smartly as we speak. Well, let's get in Mitesh then. Mitesh, getting into the weekend, not such a bad outcome. 50, 60 points higher on the Nifty. What would you do? Would you carry that long trade if you had one? And what about your fresh buy or sell calls?
So on the index, we don't have a position Nigel as yet, but on stock side, trading with more of long bias because the belief is that this is a consolidation and the markets will hit a higher eventually. So I have a BTST call on IPCA Labs, keep a stop below 1104, look for targets of 1130.35, and LNT, I think you were just mentioning that the stock seems to be getting into a buy mode again on the 2-hourly and hourly charts. So BTST here with a stop below 3500 for targets of 3550.
Okay, all right, Mitesh, thanks for that. Just looking at some more movers and shakers in the market, IT stocks have been quite firm throughout the session, and they've added some more momentum in the last half an hour. So TCS, LTI, Mindtree, Infosys, most of these stocks are having a very good session. HCL Tech, Wipro, the entire IT lot actually looking at smart gains this afternoon. We have Sudeep Bandyopadhyay of IndiTrade Capital with us on this leg of the show. Sudeep, thank you for joining in. Good to have you on as always. What is your own call on IT? Because in the last couple of days, we've seen some brokerages turn positive on the sector as a whole. How are you expecting third quarter numbers to play out, and would you buy any stocks ahead of the event?
Hi, Survi. We have been positive for some time, and we have been maintaining the view that third quarter won't be anything great. We'll probably get disappointed by the third quarter results, but that's what was expected. The recovery will start from fourth quarter onwards, and we will probably see a much better position and results from the IT companies from Q1 of next fiscal. So I think for a long-term investor or even a medium-term investor, this is a great time to pick up good quality IT stocks. And here I will probably stick to the frontline stocks. And last time I was on your show, I think I talked about Wipro and I talked about HCL Tech. I maintain my view on the basis of the fact that relatively compared to TCS and Infosys, I think they are attractively valued. There's a bit of a turmoil going on in Wipro as far as management and other things are concerned. But that's a good point to enter.
Usually doesn't.
That's on the IT space, Sudeep. Dish TV, for example, is showing some good amount of traction in the last couple of minutes. That stock should come up for you. It's up around 10.5%. We have Trident, which is up around 6%. So there is a lot of traction which is coming into specific stocks. Sudeep, hi, welcome to the show. We were having an interesting chat with Devina where she did sound a caution bell when it comes to the small caps, and that one should probably tread a little carefully when it comes to that space, considering the run-up that we've seen. But the other view is that there is a lot of fundamental improvement which has taken place in the companies, and when it comes to debt as well as pledges. From that perspective, would you be a bull or a bear when it comes to the small caps in 2024?
Look, I think the way I look at this entire space is very, very company specific. We can't paint the same, with the same brush the entire sector. And they view that there are a lot of good quality stocks, small cap stocks and mid cap stocks is absolutely correct. And some of these small and mid cap stocks will and have been showing better growth compared to even large cap companies. So definitely it is worthwhile to look at mid cap and small cap stocks selectively. You have to be careful in what you are selecting. You have to look at the growth track record, potential, and what they're doing. And then you can be in small cap and mid cap. The way things are poised this calendar year, if you look at calendar year 24, it will have to be a stock pickers market. It won't be like 23 where pretty much everything went up. So here, if you are careful and if you are able to select the right stocks, you will make money. And that opportunity probably will be there even in mid cap and small cap universe.
Okay, all right. Sudeep, request you to just stay with us. We'll come back to you with some more questions. But for the time being, let's shift focus to our favorite segment, D-Street Chatter. Nimesh joins us. He's gone and met a lot of people, I think. I can't wait to hear what he's picked up. Nimesh, telling us, what are you picking up in Dealing Room Chatter?
Hi, Nigel. Nothing for today's trade. So let me just tell you upfront that I actually met a private equity guy. So it's all long-term, big picture themes and also. Nothing for today's chatter, so to speak. But again,
so let's just focus on the phone calls, on what we have picked up in terms of Dealing Room Chatter.
So Nigel, choppy day of trade, but unlike for the last many days where there was sector leadership, today stands out to be quite a mixed day of trade. There is no leadership coming in from one particular sector. The broader markets continue to outperform, and again, the flow seems to be quite mixed. Just want to add a word on the broader market outperformance, especially in the small and mid cap. One explanation that I've picked up is that despite a big rally in the mid cap and small cap all of last year, there is a bit of momentum because of the deployment of fresh funds from the small cap. Some of the NFOs got launched last month, and that money is getting deployed in the broader market. So that explains a bit of outperformance which continues in the select mid cap and small cap stocks. That's overall feedback. Again, from a tactical point of view, all eyes will be on the Q3 earnings. So that's something to track on. A bit of buying is back in the technology stocks. We've been seeing some bit of upgrades as well in the last many days. First it was JP Morgan. Today there was a Jefferies note as well. They've turned selectively bullish on some tech stocks. So that's one space which has done relatively well. But unlike in the last many days where there is a sector leadership, today on both sides it's pretty much mixed, and the flows continue to be mixed as well.
Okay, got that, Nimesh. Today, but one of those odd days where the mid-cap mid-caps are not tearing away. But anyway, I'm sure you've still picked up enough stock-specific chatter. Tell us more.
Well, all the chatter stocks in today's trade is fortunately from the broader market. So the first stock is HBL Power. Done a big move in the entire 2023. Still buzzing in trade, good volumes as well. And the street is now anticipating a large order win for the company very soon. So that's the trigger there to track. The second stock is Piramal Pharma. Purely on back of strong flows, the stock is buzzing off late, and that's been the case today as well. Expect high delivery volumes because there is a very large buy order at an FI desk in Piramal Pharma today. The third stock is IRCTC. Within the PSU stocks, this is one stock where there is a bit of fresh buying as well. I understand some bit of domestic pension fund money seems to be chasing stocks like IRCTC off late. And the last name is RK Forging. Been consolidating in a narrow range. There is money by QIP as well. But now I understand there's going to be a clean out trade very soon. And one of the leading long only fund could be a buyer in that. So watch out for a large block in RK Forging going forward.
Okay, all right, Nimesh. So those are a couple of stocks to watch out for. Thanks very much for joining in and giving us all of those dealing room updates. We need to take a short break, but on the other side, more market talk. Stay tuned.
Welcome back. You're with us on Closing Bell. Well, let's put the spotlight on L&T. Reports are suggesting that the company may be eyeing a big construction deal. Vivek is here. Vivek, what is this buzz that you're picking up?
Well, absolutely right. You know, the first thing that we need to keep in mind is that FY24, what's actually happened is that L&T has been receiving significantly large orders from the Middle East, especially this is for the hydrocarbon segment. Now, today, a lot of international reports, a lot of international publications have reported that at this point of time, L&T is favorably placed to get and bag and other such order. So what are the reports saying? You know, it's a whole host of, both Middle East as well as other international reports. They are indicating that Saudi Aramco is nearing completion of, picking the winning bid as far as a $5 billion tender decision. Now, this particular tender is for finalizing the list of constructors or list of contractors to win the world's largest oil field that they are planning to set up. And L&T is one of the bidders as per the report. The report also indicates that L&T is favorably placed at this point of time to win at least one large bid. Why are we highlighting this? This could be a very significantly large order win. Even earlier, we've highlighted about how in FY24, L&T has managed to bag significantly large orders from the Middle East. If this fructifies, once again, L&T is already well placed to go ahead and significantly beat its FY24 order inflow guidance. If this deal fructifies, it's going to beat it quite handsomely. We reached out to L&T, we've just given them very little time to react to this particular development. Once they get back with a response, we'll update you on the same as well.
Okay, all right, Vivek. Thanks very much for that. As you can see, L&T is excited on the back of the prospects of a mega order win, which could come through from Saudi Aramco. That stock is up around 2.5% to 2.7% at this point in time. Sudeep, quickly, if you could just come in on this, what do you think it would mean for L&T, and would you be a buyer of the stock at this price?
Absolutely. We have been recommending buy in L&T for last almost a year, and this definitely augurs well. I think one point I'd like to highlight here is that the old contracts which L&T were, working on and executing had a margin profile which was significantly lower. And the newer contracts which L&T is getting, both domestic as well as international, has a much better margin profile. The overall company margin profile will significantly improve in the next fiscal. That is what has been our analysis. And, because the old contracts are running out, so the low margin contracts are running out, higher margin contracts are the new contracts, and those executions are underway. And even these Saudi Arabia contracts, and as things stand today, already 1/3 of L&T's contracts are international contracts. Majority of them are in Saudi, where they are one of the largest builders and contractors. So I think, L&T has a significant upward potential from here on. And for a long-term investor, there's absolutely no problem even acquiring at current elevated levels.
Okay, all right. Well, gentlemen, we appreciate you joining in on the show. Thanks, Sudeep, as well as Mitesh for joining in. Wishing you all a good Friday evening and a rocking weekend ahead. Well, let's wind down then the markets today. L&T, that was the star performer on the back of that exclusive, goes home with gains of close to around 2.6%. by the time we wound up. Giving it company on the upside was Adani Ports, was up 2.7%, and some of these tech names came back in style. So you had the Nifty IT index itself that did quite well. TCS was powering along. You had Infosys as well was powering along. As Surbhi said, maybe the street is not turning very, very bullish on it, but maybe the bearishness is getting cut down, and maybe that's why we did see some kind of buying on that front. On the frontline names, you had Nestle as well as Britannia, both of them the top losers. Giving it company on the downside was UPL, which has been a rank underperformer in the last 12 months or so. What else, girls?
Okay, well, I'm looking at some of the movers and shakers in the mid-cap market. They're also, when the index managed to at least, plow its way back into positive territory. So the movers on the upside include a Zomato, and this is the last couple of minutes. Big move on Zomato, 3% higher. Indus Towers up about 2.5 as well. Not sure if it has anything to do with the ATC deal. That's just getting people excited. But that's one stock that was up about 3%. Yes Bank was one of the few banking names that managed a positive close, about 3% on the upside on Yes Bank as well. If you go beyond, then look at some of the smaller names like Sula. Excellent session for this stock, with some talk about a new wine policy in Maharashtra. Maybe the old wine policy coming back in a new form. Essentially more incentives for wine manufacturing in the state. 12% up on that stock. Electra Green Tech, another splendid day for this one, 8% up. So I guess the short point is that individual stock picking is going on On the index, I think it's still a little bit of a wobbly picture out there.
Okay, yes, absolutely. Well, ending definitely on a high note, at least for the mid-caps as well as the Nifty. No pun intended there, Surbhi. But nonetheless...
It is Friday. We're okay with the pun.
Friday, wine, Sula, heading in the right
Let's
direction.
end on that note. But nonetheless, for the Nifty itself, it's just about a flat close on a week-to-date basis. We have the mid-caps which have done better, so up around 2.5% for the mid-cap index on a week-to-date basis. And the BSE small-cap index has given it company with almost a 3% gain as well. So that's the picture. The Bank Nifty for today has underperformed, so down around 0.2% currently for the Bank Nifty in terms of a close. That's all the time that we have on Closing Bell this afternoon. But don't go anywhere. Our Friday special Smart Money comes up next.